Well, experts say housing values in some capital cities could reach new record highs by April next year if prices keep rising at the same rate as they have over the past 3 months. Joining me now, Kevin Brogan from CoreLogic. Kevin, are things as bright at the moment as your tie when it comes to the property and evaluations and auction clearance rates?
Oh, look, I think the exercise that we've done is to have a look at the rate of price growth over the last 3 months and to establish when that trajectory of growth, if it maintains the same level, will actually hit a record high. Across the country, if you look at the national picture, we're currently 5.7% below the peak of dwelling values. And at the current rate of growth, which is about 1% a month over the last quarter, we'll hit that figure in about 6 months' time. But as we've discussed in the past, there are significant variations across different capital cities. So in Sydney, for example, we're still sitting about 10% below peak. The last quarter, there was about 5% growth, and that would show us hitting the peak again in about 6 months' time if this level of growth is maintained. In Melbourne, we're currently seeing the fastest growth in property prices across the country. So there we're perhaps looking at hitting the peak in about 3 months' time. Unfortunately for Darwin and Perth, since 2014, property values have continued to decline. So there isn't actually a result or a projection for hitting peak values again.
So they're going the other way.
Yes, look, unfortunately, I mean, look, the rate of decline has slowed down, but both Perth and Darwin are still over the last quarter showing negative growth.
All right, Kevin, so when you're talking about Sydney or Melbourne and you say within 5 or 6 months we could hit the peak again, how long traditionally do prices stay at the peak, and then do they keep going, or does the cycle head back down again?
Oh, look, I think, I mean, our projection of when it's going to hit the peak is reliant on that rate of growth continuing, so it's a fairly simple assumption that's been made. As we've discussed, there are a number of things that impact on the property market. We've definitely seen with auction clearance rates and with price growth that any considerations perhaps about reduced projections of economic growth have not been weighing heavily on the minds of purchasers. But nonetheless, there are obviously issues which could impact on the rate of growth and sort of impact on the longer-term performance of the market.
Yeah. Kevin, help me understand that, because I don't quite get that. Retail's not going so well at the moment. Growth is generally quite flat, but the housing market is on the way up again.
Yeah, look, I think what's happening here is we've seen a number of factors which we've discussed previously. So we saw investors returning to the market basically after the federal election, which delivered some sort of certainty about the continuity of negative gearing and capital gains tax concessions. We've then seen 3 interest rate cuts, and we also saw the APRA serviceability buffer reduced or become more flexible, and all of these things have sort of injected some degree of confidence into the market. And of course, we haven't seen a really big increase in the amount of property coming onto the market. So we've actually got quite a few confident buyers in the market for new dwellings, but relatively little new stock coming online. And of course, when demand exceeds supply, you see that upward pressure on prices.
All right, Kevin. Kevin Brogan from CoreLogic. We've got to leave it there. Thanks for joining us as always. Have a good weekend.
Thanks very much, Peter.